Hi, welcome to Crypto Made Easy. In today's tutorial, I'll be talking about margin trading, how to go about it. I'll explain the various things you need to know in order to get started with margin trading, how to borrow, how to repay your loan, and what the leverage is and how to use it correctly. I'll also talk about how to open a long and a short position in margin trading. Also, I will show you the differences between cross margin and isolated margin. So without further ado, let us get straight into it. But before then, I want to enjoin you to kindly subscribe to my channel if this is your first time of coming to my channel, and please do give this video a thumbs up so that YouTube can show it to more persons who will benefit from the information in this particular video. So in order to get started with margin trading, you want to go over to trades here, and then you scroll down to margin, and you can just click on margin and it will load up and bring up the interface for margin trading. Okay, so first of all, what is margin trading? Margin trading is a method of trading using borrowed funds from a third party. So these borrowed funds can come from the crypto exchange that you're using. In this case, we're using Binance, the funds may also come from other investors on Binance who are willing to put up their assets in order to earn some form of interest on their asset. Okay, so that is what margin trading is. It's a trading system that allows you to borrow money and use it to trade. And when you after you complete your trade, you can then pay back the loan, and you are left with your profit, which you can use for other purposes. So that is what margin trading is. Okay, so let's talk about margin. When we say margin trading, the key word there is margin. So what is margin? Margin is the amount that you are willing to put up. Is the amount of capital that you want to commit into that trading activity. So it's more like a collateral. So if you're putting up a certain amount of money, which will allow you to be able to borrow and a certain amount of money so that you can trade with more money than you have. So that is how margin trading works. So another thing you want to take note of is what we call leverage. Leverage is the amount that you multiply your margin with. Okay, so let's say you have $10 and you're using a leverage of 2x, and that means you can double your margin. That is, you can double the $10 to make it $20. So you have $20 with which to trade, and when you're done, you repay the $10 which you borrowed, and plus the interest that will accrue to it, and thereafter you keep the balance. Okay, so that is what leverage is. So when you're using leverage, you should always take note that the higher the leverage you use, the the closer the closer your entry price is to the liquidation price. I'll talk more about liquidation price subsequently. So if you're getting started with margin trading, the first thing you want to do is to decide whether you're going to be trading on cross margin or isolated margin. Cross margin allows you to borrow a particular fund, put up a particular collateral, and borrow funds to open multiple positions. So if you are using cross margin mode, it means you can put up a particular amount, particular margin, and you can use that particular margin to open multiple positions. But if you are on isolated margin mode, that means you can only borrow a particular when you put up your collateral, you can only borrow and open only one particular position. You cannot open multiple positions using the same collateral. So if you are on isolated mode, if you say you want to trade you want to trade Atom USDT in isolated margin mode, then you would borrow specifically to trade Atom USDT. And if you change your mind and you want to trade BTC USDT, then you will have to put up another collateral so that you can trade BTC USDT. That is how it is in isolated margin mode. But in cross margin mode, you can just put up a collateral and you can trade Atom USDT, you can trade BNB USDT, you can trade any other coin that you want to trade. You can open different positions on those particular uh, coin pairs. So that is how it was in cross and isolated margin mode. Now, what is the major difference here is this. In cross margin mode, all your open positions will act as collateral. So if you are being liquidated, if one of your pairs, your coin pairs gets to liquidation price, then all your open positions in that cross margin mode will be liquidated. So you're losing all your open positions. But in isolated margin mode, if one of your trade is liquidated, only that trade is affected. Any other trade that is open in isolated margin mode will not be affected because the collateral is different for each trading activity on isolated margin mode. So that is the difference. So if you want to trade, the first thing you want to do is to decide on whether you're going to be opening multiple positions using one collateral, in which case you select cross margin mode, or you're going to be opening just one trade using one collateral, and in that case you can use isolated margin mode. So let's talk about how to borrow. Before you borrow, you first of all have to put up your collateral, which is your margin. So the first thing you want to do is to come down to this point and do a transfer. Okay, so you transfer from your spot wallet into your margin account. So in this case, this is a transfer from fiat to isolated margin. But supposing you want to, okay, so in this particular interface, I am using Atom USDT as the trading pair. So if I am transferring a particular coin, let's say I'm transferring Atom, I'm transferring USDT, then I'm transferring that particular collateral to be able to trade only Atom USDT. If I don't want to trade Atom USDT, I can come right here and change the the trading pair to the one I want to trade. So that is how you transfer your collateral in isolated margin mode. But if you don't want to trade isolated, you can just come down to this point and you click on, instead of isolated margin, you can just select cross margin. And if you're in cross margin, you notice that there is no need to select the trading pair because you can use the same collateral to open multiple trading positions. And then I can come here and select the coin I want to put up as my collateral. So let's say I want to put up USDT, I can just type in USDT and then it comes up. So this is just the available USDT in my spot wallet. So if I want to transfer the whole of this, I can just click max here and then click confirm and it's done. So that is how to transfer from your spot wallet to your margin account so that you can open a margin trading uh, so that you can start trading margin. Now, if you've traded and you want to move your money from margin mode, from your margin to your spot wallet, you can just come over to this point and click the arrow and it changes from, so in this case now you're transferring from cross margin to fiat and spot, and you can just select the particular coin that you want to transfer and that is done. So once you have done the transfer, then you can come over to this point to borrow. So once you've done the transfer, in which case you have margin, and then you can borrow. So in isolated, it is similar. If you're borrowing for a particular trading pair. So you can still come over here and change the trading pair that you're borrowing for, and then you select the particular coin you want to borrow, and you will see your hourly interest rate here. So the interest rate on margin trading is hourly, is calculated every hour. Okay, so this is your hourly interest rate. That means the longer your trade continues, the higher the interest you're going to be paying on the borrowed amount. Okay, so that is how it works. You just select and all that. And if you want to repay, it is the same place. Instead of borrow, you just click on repay and you are able to repay your loan. You see that my borrowed here is zero because I have not borrowed anything. But if supposing I have borrowed, I'm going to be seeing the interest I'm supposed to pay on the borrowed amount. I'll see the borrowed amount here and the total debt, which is going to be the summation of the interest and the borrowed amount, and I can just click confirm payment and then it is done. Here I haven't borrowed any atom yet, so I have no debt to repay. So that is how it is. If you're borrowing for cross margin, cross account, it is similar. The only difference is that you're not selecting a coin pair. You just select the particular coin you want to borrow and you see your hourly interest rate, you see the borrowed atom, you see the maximum borrow amount, and you can confirm, and that is how you borrow and how you repay on margin trading. So once you have borrowed, then you can come over to this point here to carry out your transactions. So you can come here and you buy. This is for buy atom and this is for sell atom. And you can easily, if you want to do some calculations to know how much you are likely to make from the trading activity, you can use the calculator here to do some calculations. Just enter your entry point, enter your exit point, your original amount, your borrow amount, and you'll be able to know your profit and loss, and you're going to know your return on equity. So the calculator here helps you to calculate your profit and loss. And you can also use the calculator to calculate your target price. Okay, so if you want to calculate your target price, you can just put your return on equity here. Let's say you have you want to put up 5%. That is the amount. That is the return on equity you're willing to gain for that trading activity, and you can put up your original. Let's say I'm using 50 and my borrow amount is 50, and then I can calculate my target price to be 38.55 USDT. So this is the entry price and this is the target price. So this helps you to know where to put your to set your profit, and then so that you're not running at a loss. This is for margin buy. You can also do the same for margin sell, and you can also change from isolated here to cross, and it is similar. If you want to calculate your liquidation price, you do the same thing here. Put up the entry price, the amount, and the balance, and you'll be able to calculate your liquidation price. So this calculator helps you to know even before you start the trading activity whether where how many percent that coin needs to increase or decrease depending on whether you're buying or selling. So for you to make profit, and you can easily calculate your liquidation price, that will help you to set your it will help you to set your margin, your leverage. Okay, so for this particular coin pair. I'm on Atom USDT. For Atom USDT, the on isolated margin, I am allowed to borrow up to 10 times the amount of margin I'm putting up. But if I am on cross mode, then I will be allowed to borrow only 3 times the amount of collateral that I am putting up. So the amount of leverage that is available to you will depend on whether you're on cross margin or isolated margin. And once you've done that, you can easily buy, put up, select your whether you're using stop limit or limit or market and all that, and you can easily buy or sell. Now, one thing you need to note is that similar to futures trading, margin trading, you're not actually buying you- you're you're not actually buying the So to change the trading pair, you can easily come over to this point. You can come to all and see all the coin pairs that you are allowed to trade if you are on the USDT, if you are using USDT as your base currency, or if you want to use odds as your base currency. These are the coin pairs. Basically, odds is Ethereum. Then if you want to use BTC as your base currency, these are the coin pairs that you're allowed to trade with on margin trading. And you can also, there are some coin pairs that are only available on cross margin mode. So you can just click cross and see them here. And then if you want only those that are available on isolated, you can easily do the change here and you see those particular coin pairs. If you don't want to use USDT, you want to use BUSD or USDC, these are you can easily change here and you see the coin pairs that you're allowed to trade. And you can this is your chat area where you can easily visualize what has happened to that particular coin in the last 1 hour, in the last 15 minutes. You can easily change the time here, one week, 1 day, 4 hours, and so on. And you you can easily visualize what has happened and make your projections based on your technical analysis. So that is how to trade spot. It is how to trade margin, and make sure that when you're trading you don't use a very high leverage. Like I said previously, the higher your leverage, the higher the risk. The higher the leverage you use, the higher the risk of liquidation. Because if you borrow and use a very high leverage, then your liquidation price is going to be very close to your entry price. And when that happens, slight changes in the market can easily trigger liquidation, and then you lose all the collateral that you have put up for that particular trading activity. So margin trading has the potential to significantly increase your chances of making profit. It also has the risk of you losing your entire collateral. So you want to make sure that you have done your technical analysis correctly before you start trading margin, because of the risks that is associated with margin trading. So if you enjoy this particular tutorial, please kindly like this video and subscribe to my channel if this is your first time of coming to my channel. And if you have any questions, please kindly drop them in the comment section. I will attend to those questions as time goes by. Have a lovely day and have a wonderful trading experience. Bye.